Welcome to our event today. Welcome to the Brookings Doha Center event on oil prices and taxation in the Gulf and the political aspects of that. It's a very important event, and we would like to thank you for being here to have this discussion with us. This is actually one of the first events in a long time that we had actually to close the registration, the RSVPs, for how many RSVPs that we received of people expressing interest in this discussion. So congratulations for making it and RSVPing in the beginning and to make it here, because we apologize for not being able to accommodate all the requests that came, that they wanted to be in this event and to take part in the discussion. So congratulations, and I thank you for acting quickly. So in the future, we should have, we'll do our best to have more of this discussion. And as you can see, this reflects actually how important this subject is for the people here in the Gulf and for people outside. This is something that has caused some panic, the reduction of oil prices to below $30 for an oil barrel. This is not, I should say, this is not the first time that oil prices go below $30, actually. In 1986, it went below $30, and in 1997 as well, it went below $30 as well. So what is so different, if any, the experts will tell us, this time, that this has caused some panic and concerns? And as I said, you can see of like the people who expressed interest in this discussion, that we started to see this response to the reduction of oil prices. And not only on the people's response to it, but also we're talking about for the first time on such austerity measures, whether it's of the VAT taxes or some other measures as well. So this is very important for us here in this region and for the world markets as well. And I have to tell you, many people around the world are also watching, would like to hear from the experts also about this as well. So should we expect to see, and I'm pleased we're having the GCC here with us today, should we expect to see more of a GCC response to this? Should we expect to see more of a coordinated or collaborated effort between the GCC countries over this? And also, historically, or at least the past couple of years, I heard a lot about more of expecting Saudi Arabia to cut oil production. Now the question, why is Saudi Arabia in particular? Yes, it's the largest oil producer, but there are others as well that can impact the oil prices. So, and it seems that we have gone beyond this kind of discussion, where I remember probably almost a year ago, we were talking about, or the debate was about whether this is the reduction of oil prices is a tool that Saudi Arabia using against Iran, or this kind of discussion. We're not hearing this any longer, by the way. And this is an important something to keep in mind, why we're talking about a different type of discussion today. And also, why aren't we seeing more of other countries like Russia, major countries like affecting oil prices, are not acting or taking measures? So many questions, which is also related to the political aspect that we would like, or we hope actually, that our experts today can achieve or can help us understand all these questions. So we're very fortunate to have three distinguished speakers on the subjects that we're going to discuss today. I will begin with Robin. Robin, to tell us what is going on the oil prices. So Robin Mills, he is a non-resident fellow for energy at the Brookings Doha Center. He is also lead of consulting at Manar as well in the UAE. He's the author of two important books on this, The Myth of the Oil Crisis. So it looks like it's a myth of this, the oil crisis, from what I read from the title of the book, and Capturing Carbon, two important books on this. Robin is a columnist on energy and environmental issues at the National. He writes frequently, and he's on Twitter as well, so you can see his or read his wording on that. He is an advisor to the Berkeley Program on Middle East Entrepreneurship and member of the International Association for Energy Economics and the Association of International Petroleum Negotiations. Robin, thank you for being with us, and the floor is yours.
Thank you, Ibrahim. Thanks to everybody for being here this evening and for such an important topic that affects us all in this region, topic of oil prices and energy prices and the energy market in general. So back in the early 1900s, J.P. Morgan, of course the founder of the famous bank, was asked what he would think, what he thought would happen to stock prices, and he said that they would fluctuate. And I think the same is true of oil prices. Everybody has their theory about where oil prices are going, up or down. Inevitably people are proven wrong, whichever direction they guess. So I will say a little bit about, I too have my own theories about oil prices, and I will give some views on that. I don't advise any of you to invest on the views that I may say, whether they're going up or down. But I will try and point to some of the factors that are affecting oil prices and why, in some ways, what we're seeing now is quite similar to events that we've seen before, but as Ibrahim alludes to, why things are quite different in some ways as well, why this situation may be different from oil price slumps we've seen in the past. And I'll try to talk about some of the dynamics of the market and indeed why some things are different and why some of the key players in the market are acting differently from how they have done in the past. And I'll also try to look a little bit longer term and think about what is the longer term outlook for the oil market in general over a longer period, over a 5, a 10 or even a 20-year period. And then I will try and touch a little bit on what is the impact of this on the GCC countries, what can they be doing, what are they doing, what should they be doing. I think my colleagues will address that far more, but I will touch a bit on the impact on the energy sector. So where are we now? As Ibrahim reminds us, we're in a case where oil prices have briefly gone below $30 a barrel. They're now slightly above, but they are far below the $100 a barrel that we'd got used to, and the $100 a barrel period that we had really between 2012 to the middle of 2014. And we've been in let's say, in a relatively high price world ever since 2003 or so, when oil prices rose dramatically and reached a peak of $147 per barrel in 2008. Now that was interrupted by the financial crisis, and prices did fall very sharply then. They fell to $34 a barrel at one point, but they rebounded very quickly. And that might lead us to ask, will this be similar? Will prices also rebound very quickly from the low point that they are at now? And I think the answer to that is no, that they won't. This cycle is different. In some ways, this is a classic oil price cycle. So it's driven by a combination of a long period of high prices that forces efficiency, it forces cuts in demand by oil consumers, new technologies, new, more efficient technologies and ways of using oil, alternative fuels and so on. And at the same time, it drives a surge in supply. And so high-cost supply comes into the market. And again, we have seen that over recent years, nowhere more than in the US, where the invention and the development of the technology of producing shale oil through horizontal drilling, hydraulic fracturing, has led the US oil production to rebound remarkably. The US, which in 2006 was importing something like 10 million barrels per day, and now imports down to less than 5 million barrels per day. US oil production, which was somewhat over 5 million barrels per day, has now reached up to almost 10 million barrels per day through this technology of shale oil. So that's an incredible turnaround, I think, an unexpected one. But although this magnitude of this turnaround is unexpected, we shouldn't have been so surprised to see something like this, because a lesson of high prices is they always bring new supply. High prices are, as the saying has it, the best cure for high prices is high prices. And eventually we see a cycle and we see oil prices falling again as new supply comes. And Ibrahim mentioned my book, The Myth of the Oil Crisis, which was published in 2008 at about the time of the peak in oil prices. And this is what I said at the time, that these very high oil prices were unsustainable. They would bring new supply on the market, and at some point prices would fall again. We were not running out of oil. Oil resources around the world are very abundant, not only in the US and of course in the Middle East, but in many other areas as well. So in a way, this is just another classic oil price cycle. But it's also different, and I want to say a little bit about why it's different. One reason why it's different, I think, is the rise of US shale oil. US shale oil is quite different from conventional oil production. Conventional oil production, as we've had in other parts of the world for many years, involves very long lead time investments. It can take 3 to 4 years to explore a new area, for example, when the North Sea was explored in the early 1970s. It can then take another 3 to 4 years when a field is discovered to develop it, and then that field will produce at pretty low operating costs, will produce for 20, 30 years. And so once that investment is sunk, it is very hard to stop it and to stop production or reduce production. Shale oil production is quite different. Once a shale oil well is easy to drill, now shale oil wells can be drilled in a few weeks. They produce a very high amount of oil in the early phase, and it very quickly declines away to very low levels. So the well, an individual shale oil well, pays out very, very quickly, and within a year or so its production is quite minimal. And so that makes it quite radically different from conventional oil production. When oil prices are high, a company can easily drill a well and they know that they will get their money back within a year. Anything after that is profit. When oil prices are low, as we have now, the companies can also easily stop drilling. And okay, yes, their production will decline, but they're not stuck with a lot of sunk capex, and a lot of sunk capital expenditure. And so this makes shale oil quite different, and there is a theory in the market that this new world shale oil will balance the market much more quickly. When the oil price goes up, shale oil guys will start drilling, production will come, price will fall, they'll stop drilling, price will recover, and so we may see much shorter cycles in the oil market and the oil price than we've had before. That theory is still to be tested. This current oil price fall started in the middle of 2014. We're now in the start of 2016, a year and a half later. Oil prices are still low. Shale oil production has fallen to a degree, but not by much. And the US shale oil industry has proved surprisingly robust. 2016 may be the year that shale oil companies start getting into serious trouble and we start seeing bankruptcies. But still, it has been a lot more robust than I think a lot of people expected. And shale oil producers have shown a remarkable ability to cut their costs and to keep producing even at low prices. A couple of years ago, you would have heard that shale oil drillers needed $80 per barrel prices to be profitable. Now a lot of companies are quite confident they could be profitable at $50 a barrel. And that's above current levels, but not too far above. And so this, I think, is part of why this cycle may be different. And there is the possibility, of course, that shale oil production may spread worldwide. There's no reason to expect that it's just the US that has this unique geology. We find shale formations that can produce oil all over the world, and we're seeing already, Canada already produces shale oil, and we're seeing some quite promising experiments being done in Argentina, in Russia, and I think there's also promise in Australia and probably other parts of the world, including here in the Middle East as well. And so we could expect, if prices were to go higher or remain high, that we would see the shale oil production spreading worldwide. And this consideration has led OPEC, in this case, to behave quite differently from what it has done previously. If you look at the previous oil price falls, when we had very low oil prices back in 1998, and then again we had low oil prices in 2008-09 following the financial crisis, OPEC was able to step in, cut production, and after a year or two, prices recovered to a higher level. OPEC has not done that this time. Now, when we say OPEC, I think we're really in this case talking about Saudi Arabia. Saudi Arabia is the key lead country within OPEC. It's obviously by some way the biggest producer, and it has always taken that leadership role. Kuwait and the UAE have generally supported Saudi Arabia very closely, so you can think about those three GCC countries as working together quite closely within OPEC. This time they've chosen not to reduce production. In fact, they've actually increased production even though oil prices are low. And they've done that, I think, in response to this new world and this new challenge of shale oil, where they see that were they to cut production and oil prices increase, that will just encourage shale oil drillers to come back to the market and start drilling and increase US oil production. We had a case in 2012, 13 and 14 when US oil production was increasing 1.5 or 1.8 million barrels per day in that year, considerably more than entire global demand growth. In other words, the US was taking a larger and larger share of the global market. And Saudi Arabia, I think, looked back to the point in the 1980s when they cut production to defend prices, and they discovered they couldn't defend their level of prices, and at some point they would have been producing no oil at all if they'd stuck with that strategy. And I think Saudi Arabia this time was far more proactive and thought, we are not going to get in that situation again of cutting production very sharply and finding our market disappearing. We're going to be proactive, we're going to keep production relatively high and accept that prices will be low, and this will maintain our market share. Hopefully demand will revive a bit, but particularly some of these competitors, the US shale oil, but any other high-cost competitor will be driven out of the market. And I think if I were looking at this from a Saudi point of view, I wouldn't care particularly whether it's shale oil. I would be happy to see any high-cost producer come out of the market. Some of these investments, we've seen enormous cuts in the oil industry investment this year and last year in expensive areas such as the Canadian oil sands, such as deep water drilling, such as drilling in the Arctic, such as drilling in very mature areas like the North Sea where production has been declining for years. So those areas in years to come will see a decline in production, and that will open up, should open up more demand for OPEC oil. And I think the theory and the hope would be we get to a situation which is stable, where US shale oil production can increase at a reasonable rate, and yes, it can help meet demand, but it is not flooding the market, and there's still room also for OPEC to increase production. Because we need to remember, of course, that within OPEC are several other countries, not only the four GCC members, Saudi Arabia, Kuwait, the UAE and Qatar, but also many other important oil producers, particularly Iran and Iraq, and of course others, Venezuela, Nigeria, and so on. And some of those also have their own plans to increase production. Iraq has increased production quite sharply, particularly last year, and now we have Iran coming back in a full way to the market following the deal on its nuclear issue and the ending of sanctions. Iran will also add a lot of oil to the market this year. And that's another factor, I think, in the Saudi decision. They would not wish to be cutting production and ceding market to Iran and Iraq. Now, there may be political conspiracy theories about this, that Saudi Arabia is keeping prices low to punish Iran or to punish Russia or somebody else. I personally don't buy these theories. Saudi Arabia and Iran have had, as well-known political differences going back a long way, and certainly from 2012 when the sanctions were imposed on Iran, and yet the Saudis did not take action until the middle of 2014. In fact, you could say they didn't take action until late 2014 in the OPEC meeting in November then when they didn't support production cuts. Are the Saudis aware of the impact that low oil prices have on other producing countries? Of course they are. But I think that's different from saying that this is being used as a deliberate challenge to those countries. There are very good market reasons and economic reasons for this policy. Yes, it's painful in the short term, but the hope is it will have a longer term benefit. And I think in that sense it's the right policy and probably the only policy that countries could pursue. Now, will there be a grand agreement within OPEC and with some non-OPEC members to cut production collectively? So for OPEC and Russia and maybe some other countries to cut production? That's been talked about. There's been a lot of diplomatic activity, the Venezuelan minister flying all over the world recently to discuss this. I'm quite skeptical that an agreement will be reached, at least now. It's too hard now to say what a proper level of production should be. Iran is still coming back. Until the end of the year, we won't really know what Iran can produce on a sustainable basis. So it's hard to see that there's any room for an agreement now. Perhaps by the end of the year, there might be room for such an agreement. I'm still a bit skeptical. It'll depend, I think, what's happening at the end of the year in terms of oil prices and the global market. In terms of, I did promise that I would give you some of my theories about oil prices. I think we'll see that current prices are down at $30 a barrel or so are too low for most producers. Middle East producers can produce, yes, very happily at these levels. Their costs are probably $10 per barrel or less. But for most other producers, it's very difficult. For shale oil producers in particular, I said they can survive at $50, but probably not at $30, most of them. And we are seeing US shale oil production declining. So I think we can expect that, yes, prices will recover, but not dramatically. They can come up from current levels, but not a long way. This year, of course, we have Iran weighing on the market. Going into next year, we may see some recovery in prices. But I do not expect prices to get back to the $100 a barrel level for a long time, if ever. Always, of course, excluding any major geopolitical conflict or crisis that would seriously interrupt oil production somewhere. So yes, we can expect something of recovery, but it will nevertheless be a difficult period. And I think when you look at the challenge of the GCC countries, they have a challenge to show a credible policy that they are accepting low oil prices. And of course that means they have to show economically that they can survive these prices and their economies and their budgets can keep running at an acceptable level. And so they can show that they're more competitive than some other oil-producing countries which will struggle and maybe will be forced to cut production or make other changes first. So it's an important part. It goes both ways. Yes, low oil prices have an impact on the budget and the economy, but having a robust economy is also part of being able to sustain and survive low oil prices. And so we are seeing measures such as cutting subsidies, for example, cutting energy subsidies. We've seen most of the GCC countries raising fuel prices, raising electricity prices recently, and saving in that way. And we will see, I think, more such measures. Overall, I think the GCC countries, yes, this is certainly uncomfortable for them. My colleagues will talk about some of the ways that they can, the GCC countries can address these economic challenges and budgetary challenges, and it's an important part of surviving this process. It's uncomfortable for them, but they are not in the worst position. You can point to several other countries, oil-producing countries, which are in a far worse economic position for whom this situation is already very painful. But in the longer term, I think we should not look for a major recovery in oil prices. Every oil-producing country needs a robust budget and a robust economic plan that is good for 20 years without being reliant on a return to very high oil prices. Thank you.
Thank you, Robin. Thank you for these insights on oil prices. Not sure if this is comforting or adding more concerns or panic about the oil markets, but we will see. So thank you for this. Now we will go to the next part of this discussion on the impact of the reduction of oil prices, and in particular on the taxation. As I said before, this is probably the first time we're seeing such heavy austerity measures are being taken in the Gulf in order to cope with the reduction of oil prices. And we're seeing for the first time talking about VAT tax and other types of measures that are being taken. Does that mean this is only the beginning? Should we expect to see more measures taken to respond to the reduction of oil prices? Are we talking about the imposition of the VAT tax as like for certain, or there is still room to talk about this? And also, what does that mean for just the ordinary citizen about the imposing the VAT tax here? Such difficult and complex situation about the tax and what it really means. And here we're delighted to have a senior expert on this level to educate us about this, Dr. Fadi Makki. He's a senior fellow at the Issam Fares Center at the American University of Beirut. He's working with them on a research project on consumer citizen using behavioral insights with the Issam Fares. He has 18 years experience in strategy consulting, public sector reform, economic and sustainable development, trade policy, education, and social entrepreneurship. Currently, Dr. Fadi is a visiting fellow, senior fellow at Georgetown University in Qatar. He is also the managing director of Adima Consulting. Dr. Fadi served as Director General of the Ministry of Economy and Trade in Lebanon. So also the public dimension is present in his talk to us. He held senior posts in the GCC, actually, public sector, in the GCC public sector, including the Qatar National Food Security Program and the Ministry of Finance, Economy, and Commerce in Qatar. Dr. Fadi, thank you for being with us. The floor is yours.
Thank you very much. I'm delighted and honored to be with this distinguished panel. It's a great pleasure to recognize many faces in the audience as well, all colleagues and friends. So my intervention will cover 4 parts. I will continue where my colleague Robin left it. So I'll start with the macroeconomic developments and discuss the imperative for reform. Okay. So,
Yeah, go ahead.
okay. So I'll cover 4 parts. Um, Macroeconomic developments and the need for reform, then move to global practices in relation to VAT, then move to the potential impact of the VAT in the GCC, and with some concluding remarks on key success factors for implementation of VAT. And let's see.
That's with the tax issue.
We say
Started to see the austerity measures here
I hope that works.
in action.
طيب. I hope not. That's not an attempt to silence me.
No, absolutely not.
So, to start with the macroeconomic developments, where do we stand? Not a so great performance over the last year or so. As we've seen, global growth has slowed down to 3.3% in 2015. Economic slowdown in emerging markets and developing countries. Growth in China has gone down to 6.5%, and this is a new reality, a new fact that we need to get used to. No more the double-digit growth that we got used to previously. Oil prices over the last 18 months or so went down by 75%. The world, as Robin mentioned, is awash with oil, and more so with Iran re-entering the market. Some gloomy year-end earnings for large oil companies, one needs to note, BP, Shell, Chevron, and so on. Sharp slowdown in world trade. And on this one, I would just mention that the merchandise trade in 2015 is going to be registering a 1% growth, no more, down from 3.1% in 2014. Probably that's the worst since a long time, probably since the dot-com bust. That would see a shift towards regionalism, not only because of lack of progress on the Doha round, not much progress on the Nairobi conference, but also there's a move towards regionalism. The Trans-Pacific Partnership is the biggest example. The free trade area that brings 12 countries together, including the US. It's currently being reviewed with Congress. It will go through, but that really, these 12 countries will constitute 40% of the global economy. So that's a huge free trade agreement. If that goes through, it will usher more free trade agreements, more regionalism. The next one to come is the US-EU. And the last on the macroeconomic developments, if you want, the club of the negative interest rates is expanding. And the most recent, not newcomer because it was one of the founders of that some 20 years back, Japan is back there. And that's very interesting to watch. So even in the region, growth is expected to slow. IMF projections suggesting some 3.2% growth in 2015 and 2.7% in 2016. Export revenue are expected to be nearly 275 billion lower in 2015 than in 2014. That's significant. As a result, fiscal balances are going to be deteriorating, and some kind of significant deficits as well. All in all, that calls for a reform at least 4 levels. And I'm going to mention those 4 and focus on only one of them. So the first level of reform is needed at, I wouldn't say removing subsidies, but rationing subsidies and reducing them. So the first one, reforming the government institution, making them lean and efficient, pursuing the diversification away from oil and gas. This is, of course, these are things that have been happening, but pursuing them more persistently, if I may call it. And last, enhancing the revenue generation, in particular through new ways of generating taxes, such as introducing the value-added tax, the VAT. And just to mention, of course, that's very important because other forms are no longer possible, such as re-increasing tariffs because of commitments of the GCC countries as part of the WTO and other free trade agreements. So going to the, a bit covering on the VAT landscape, the global practices. The VAT is widely implemented as a revenue instrument across the world. Currently, there are some 158 countries that use VAT. Over the last 20 years, over the last 10 years, some 20 more countries have been added to that list. It's popular for several reasons. For instance, it's the relative ease of its administration and collection once you've gone through the legal instruments, the laws, and so on. And it's fairly predictable as far as revenue stream is concerned. Plus, and that's extremely important, another reason why this is kind of popular and very important is that it helps us as policymakers know better our economy. So the granularity that is provided by collecting VAT is just amazing. It provides a wealth of information, of data, to decision makers to design very focused and targeted economic policy. So that is not to be underestimated. Now, the VAT rates and structures vary substantially. There's no one rule fitting everybody. You've got the lower VAT rates within, for instance, Asia Pacific region, and you have the higher rates, 20 and 25%, and even more in Western Europe. Even EU has its own variable rates. You have 17%, you have 20%, you have 25, 27, so it is quite variable. Since its rollout, for instance, many of the EU countries have changed their VAT rates and increased it mostly. There are some reductions, but mostly there have been increases. If I look briefly at some of the potential impact of introducing VAT in the GCC, I would look at only three aspects here. One, the potential impact on revenue, on inflation, and on the doing business. So, of course, on the revenue, it depends on many things. It depends on the rate that we choose up front, on the exclusions, on the level of imports, because much of the VAT is collected at the border, on the loopholes in the system, on the efficiency in the administration, and so on. But overall, estimates suggest that at around 5% of VAT, the VAT revenue as a percentage of GDP is going to be between 0.8% and 1.6%, depending on the country in the GCC. But more important than the revenue in the initial period is the impact on other related aspects, such as improving compliance on all aspects of taxation, promoting transparency. And as I said earlier, and I keep stressing that because that's one of the key themes that I want to discuss, is the fact that it helps you better know your economy, to better design targeted policy. The granularity is just amazing. On the inflation, we, of course, from studies that have been done so far, that the first round impact of VAT on inflation is expected to be limited, not only, for instance, not only because the maximum direct effect is not likely to exceed the actual rate itself, but because of potential exemption rates that is going to reduce the inflationary impact. To be noted here that typically when introducing VAT, some businesses try to widen the margin, particularly at the beginning, and that calls for special attention from regulators, particularly consumer protection agencies upfront. So that is something to be paid attention to. On the impact of businesses generally, the key impact is going to be initially the cost of compliance. And essentially, the business is going to play the role of tax collectors and pushing it on further down the value chain. And the more they comply, the less the impact it will be on them. So the more transparent, the more they push the burden away from them. Now, when we talk about designing the VAT, we should always bear in mind three kinds of stakeholders: government interest, business interest, and citizens' interest. And for each one of those components that we'll talk about, we need to bear in mind those three stakeholders. So on the 5% that is being that is going to be the policy going forward, that's potentially a start. It could be increased later on. It gives time for businesses and for citizens to get used to it, and will reduce the potential impact on inflation and prices. Of course, it looks like they are going with a single rate, so no multiple rates, and that's the recommendation from most of the big institutions, IMF and OECD and the World Bank. And of course, not only because of the mainly because of the complexities of introducing a multiple VAT rates. That's going to be a nightmare, actually. Variability, we're not at the discussion of variability across countries of tax rates. It's going to be the same one, although there might be different movers. There could be last movers, which is a decision to which extent a last mover would slow down the whole process. For implementation, we're talking about 2 years of implementation starting January 2018, to be seen if a country that is going to not be ready, the GCC is going to slow down or go as a second phase. Institutional aspects, I'm concluding just 1 minute more.
Sure.
So on the institutional aspects, of course, a few points from practice. One is to look at increasing the posture of a possible VAT DG in every Ministry of Finance, or restructure altogether the revenue authority, bring under it customs, other taxation. So it's an opportunity to look at this. It's important to also distinguish between policy, VAT policy and operation of VAT, to be coordinated and to have cooperation with the GCC-wide such entity for this. Now, key success factor, if I may conclude, is the good planning and the good strategy, detailed strategy with the proper legal framework that goes into the entire processes and aspects and procedures of the value chain of the VAT. Human capabilities from practice, it's important not only to prepare them through courses and so on, but to have them shadow other tax administrations in like-minded countries in the region who've been success stories in this area. At the end, I will conclude with one thing. So before really embarking, I would not be exaggerating if I say more and more impact assessment on the sectors, on the economy, on the countries, to be done as soon as possible from different angles. That will ensure, of course, readiness on all levels, understanding the 80-20 rule. Where would we expect most of the VAT revenue to come from? Is it customs? Do we focus on customs, on building the capacity, and so on? And more importantly, if I conclude this remark, that this readiness assessment will help countries maximize opportunities for private sector to be part of this process. For instance, collection could be outsourced to banks or worked through banks. Additional areas could be also thought of for including private sector in its implementation. So potentially there could be hurdles, and it's expected in the first part, but going forward, it's the multiplier effect of introducing such a VAT could be amazing if well introduced and phased.
Thank you very much, Dr. Fadi, for this great discussion on VAT and the taxes, and for helping us understand this better. And now, as you all know, it's all about politics. So we need the political dimension of this. We need more of the comprehensive picture, where we're very fortunate to have Dr. Abdulaziz Al-Awashek from the GCC, is to take us what this means for more of a, to put it in a context level of a GCC, and more on the political context of this. So Dr. Abdulaziz, thank you for being with us. Dr. Abdulaziz Al-Awashek, he is the GCC Assistant Secretary General for Foreign Affairs. He is responsible for coordination of the GCC foreign policy towards regional and international issues. Dr. Abdulaziz is also responsible for trade relations and negotiations between the GCC as a bloc and other countries and blocs as well. Dr. Abdulaziz, he served as the GCC Director General for International Relations, and also the Director of Economic Integration, he was also overseeing the GCC economic integration process. He was also responsible for the establishment of the GCC Common Market, which was established, launched in December 2007. Dr. Abdulaziz, thank you for your time and for being with us.
Thank you.
And the floor is yours.
Thank you very much. And thank you, Robin and Fadi, for setting the stage and for helping us all understand where we are regarding the causes for the current challenge, and also some of the remedies through the tax system. Thank you, especially Fadi, for, I hope you convince everybody that's a great thing to have a VAT. I think Robin pointed out, and I think he's correct, that this is a different kind of crisis in oil prices. But I would say it's not for the same reasons probably Robin, I think, meant. The last time we had seriously low prices was in 1998, when the oil price was about $10, even dipped below $10 a barrel. And at the time, the challenge for GCC countries was to maintain revenue. Why? Because almost all 6 countries had run deficits for over 10 years. Public debt was in dangerous positions, exceeding 100% of GDP in some countries. So in '98, the picture was pretty grim. And the main objective was to maintain government revenue. We're now in a different ballgame. And it's no longer an issue of revenue, it's about market share. And market share means that to maintain market share, that means dealing with non-OPEC producers. And if it is true that Russia, which is the number one, the United States and Russia are the main 2 countries outside OPEC, if prospects for coordinating with them are remote, as Robin implied about Russia, we have smaller players like Mexico and Norway, but these are the 2 big ones. If the prospects for coordination with them, meaning agreeing to reduce the supply, if that's remote, then we should expect oil prices to continue. And that's the presumption that most GCC countries, all of us, in fact, are expecting. So oil prices will stay with us for a while. Low oil prices will stay low for a while. But we are in a good position to deal with that, unlike in 1998. Take Saudi Arabia, for example. In '98, its public debt was about 100% of GDP, 630 billion at the time. Now it's 1.6 of GDP, 1.6%. So even if they doubled it or tripled it or quadrupled it, you're still talking about 8% maybe, 7.5% of GDP, way below the danger zone. So Saudi Arabia is in no hurry to go back to its role as a swing producer and reduce oil production to maintain its revenue, because that's really not the concern now. The concern is to bring about discipline in the oil market, which is lacking now. Now you have all the other GCC countries coordinate with Saudi Arabia. We have a committee, a ministerial committee for petroleum ministers. They meet regularly. Their assistants also meet regularly. And they coordinate policy. And so that when they go to OPEC, they also have the same position. Not all GCC countries are members of OPEC, but they coordinate nevertheless on the policies. And so given that the fact that we do not expect oil revenue to rebound anytime soon, we have undertaking other measures. I must mention something. This one reason why we have been able to deal with the difficulties that we had in '98, the high public debt, the high deficits that were going on and on and on, was an idea that was introduced in 2001, which is the monetary union. Under the monetary union, by GCC law, all member states had to bring their economies to converge, as they call it, on 5 indicators. 3 monetary, which was inflation, interest rates, and the level of reserves that they have to keep to maintain the strength of their economies, and 2 fiscal indicators, which is annual budget deficit and the public debt. And between 2001 until 2007 or 8, all countries were able to converge and reach the levels that were set by the heads of state, which is 3% for the annual deficit, and 60% for the public debt. And also inflation rate was brought, as you probably recall if you lived here in those days, inflation rates were also brought to reasonable levels, despite the fact that the economies were heating up. So while the economies were growing at double-digit, inflation actually was going down. So I think the GCC member states happy with those results, happy with their policies. Now I think they're in better position to deal with the crisis. Take the example of Saudi Arabia now. Yes, this year in the budget for 2016, they expect to have a deficit. Actually, Saudi Arabia for 2016 has announced 2 budgets. One assuming that oil prices will go at the same level or lower, and the other one if oil prices by some miracle picked up during 2016. And so under the worst case scenario, Saudi Arabia will have a deficit of about 1/3 of its budget will be covered by borrowing or by issuing bonds or different methods. And so even at 1/3 of the budget, of 13% of GDP, it still has other assets that will make it, other countries in the same position probably would panic, but not Saudi Arabia, or not for that matter, most GCC countries. I'll give you some numbers. Foreign reserves, that means cash or semi-liquid reserves, are about $700 billion. Most of them are outside the country. And then you have 2 sovereign funds within the country. And you have what is called the General Reserve Fund. And then you have about 3-4 development banks. If you calculate all the assets that are owned by the government in these fully owned entities, meaning fully owned by the government, talk about maybe $1.5 trillion. Then you add to that about half of the capitalization, half of the shares in the Saudi stock market, which is the largest stock market in the region, is owned by the government. So the government could also use those, should it choose to do so, can liquidate some of those assets to cover its expenses. So you have 2 sources. You have third, which I think has been talked about a lot because it's sensational, about companies that are not listed, that are also fully owned by the government. And the biggest one, of course, is Aramco, which is probably the most valuable asset in the world. About the estimates about, I don't think anybody knows how valuable Aramco is, but the estimate is about $4 to $5 trillion. And the government could liquidate only 1% probably of that, or could sorry, not liquidate, but could sell in 1%, and that should cover deficits probably for several years. So, and the same thing for other GCC countries, most of them, is that they are in good position, and that's why you see, I think, certain policies that some people think, well, that doesn't make sense if your revenue is declining by 70% from oil, and the common advice which we get all the time from the IMF, reduce costs, reduce government spending, reduce this, cut that, you know, and I really don't think we need to do that, and I think it's actually good economic advice, good Keynesian advice would say no, because if there is a recession, you shouldn't augment it by taking on even more measures that will make the recession even worse, especially since you don't need to. However, I think clever as they are, ministers of finance and others have figured this is a good time to introduce some belt-tightening measures. Don't tell anybody I told you that. But, so that we don't need the revenue, but we need the discipline. We need the long-term fiscal sustainability. You cannot sustain deficits indefinitely, you know, at 1/3 of the budget or 13% of GDP. Obviously, cannot be sustained. In 2015, we estimated we lost about $300+ billion in potential, not in real money, but in potential revenue that we could have had the money, had the oil price been at such and such rate. I mean, you see those numbers, and I use them all the time, I think just for sensational reasons, because when you think about it, oil has been less than $2-3 a barrel for most of its history. The outliers are when you had the oil prices about $100 or more. So oil prices should probably be, you know, in these levels. And there is no harm in it, as long as you develop other alternatives. You develop non-oil revenue. Saudi Arabia announced at the beginning of this year that they were able to increase their non-oil revenue by 29% for 2015. 2016, they probably will increase it more. And if you notice the speeches by the king and by the Minister of Finance and others, around the time the budget was announced, they're not happy. They're not happy with the effectiveness of government spending. They're not happy with the waste in the government. So again, this is an opportunity to cut waste. The price support for fuel only costs the government about 20% of its budget. And that's wasted. A lot of it is wasted. Support for basic goods, it also costs the government a huge chunk. None of that is necessary. And you can do it without hurting people with limited income. You can adjust the low wages, you can adjust the people who are in fixed income, you can adjust their retirement pensions, you can adjust the people on the lower ranks of the civil service or the military, and you still have a lot of change left if you rationalize the price supports. And that's what we're working on. You probably saw the announcements from several governments of the GCC. They're trying to bring their prices to a reasonable level, a level that limits the burden on the government and at the same time does not affect consumers that much. What is missing so far, and I think this is something we need to work on, is the remedies for people who are on welfare that's still being worked out. Because you need to do that, because that obviously has affected the cost of their basic consumption goods. Because fuel enters into almost every production process. So I think cutting waste is an important factor. Reducing price support is another one. And the third one is introducing new revenue generating measures. And one of them only is the VAT. And I'll just speak a little bit about the VAT because Fadi covered most of it. The decision has been made for a while now to introduce a VAT system in the GCC. Will be a collective system for all GCC countries. Will treat all GCC countries as one tax zone, which is very important because a VAT system is based on not only collecting tax but also getting credit for the inputs. So if the 6 countries are dealt with as a one tax system, one tax zone, that means you will avoid what is called cascading, meaning that you pay tax in Qatar and then you pay again in Saudi Arabia, you pay again in Kuwait. And so you're able to use it as just one. So it's at 5% unified level. And it has been ready now for several years. And we started thinking about it, working on it 2005, in fact. And the purpose for it at the time was how much time do I have?
3 minutes.
Was two things. One is to reform the tax system. GCC countries have, in fact, several hundred what is called nuisance taxes, levies and taxes that collected at every level of production and sale. Is that the end? So the idea was to do away with some of those nuisance taxes and introduce this more efficient, more transparent tax system that will prevent what I call cascading in particular, because you do not pay tax, unlike a sales tax, for example, which you're familiar with, like from the United States. Sales tax you pay at every level of production, while a VAT is 5% for the whole production process, more or less. And the second objective for the VAT system at the time when we started thinking about it in 2005 was the fact that the GCC collectively was entering into FTA negotiations with almost all of its trading partners, which meant by virtue of those agreements, customs revenue will go down, and you need something to compensate for that. The idea at the time was or the instructions we had, the new tax has to be revenue neutral, only cover the loss from eliminating nuisance taxes and from the losing the customs revenue. That, of course, has changed, and I think because now I think we probably needed to generate revenue for the governments, and our calculations are slightly different from Fadi's. Will bring in about 3% of GDP, if the collection levels are reasonable. Meaning if you are able to implement it, the threshold will be high enough in the beginning to not to burden small businesses, so it'll be about $1 million turnover. But otherwise, it should cover the whole economy, services and goods. And it's supposed to enter into effect, as Fadi said, at the beginning of 2018. But I think it has a third purpose, which is very important, and I'm not sure that Fadi covered it, which is it's the only tool we have to deal with the recession, considering that our monetary policy is blunted by the fact that our currencies are pegged to the dollar. So having a system, after it works for a while, and you can adjust the rate up and down to deal with the economy. If it's in a recession, you can reduce the rate, and if it is heating up, you can do the opposite. You can raise the VAT. Now, I think Ibrahim wanted me also to talk about how is that affecting the relationship between people and governments. And you have seen when price supports were removed in some countries, people were upset and took to the streets. You didn't see any of that in the GCC, and I think in part because people understand this time is important for everybody to chip in. Also, I think they realize that even after raising the price support for fuel, you're still talking about some of the lowest prices of fuel around in the world. And so I don't think it has affected negatively that relationship between people and the government. And the second thing, I think, it has, if anything, it has brought them into the discussion about what's a sound fiscal policy should be like. And that's the way it should be. as long as the government was only, raking in hundreds of billions of dollars of oil and spending it, with abandon, people, and there was plenty of money to go around. People didn't care because they were getting their share anyway. I think now the government is leveling with people. Most of them are leveling with people and saying, well, we have a challenge, and we need to deal with it. And I think people seem to appreciate being taken seriously and dealt with as adults for a change. Thank you.
Thank you very much, Dr. Abdulaziz. That's excellent presentation on what to expect on the bigger picture. So I will take the liberty of asking. There are many questions, but I will not monopolize the time, and try to have all my questions in one round, for each one of the speakers, and then so I can give you time to ask your questions. So, Robin, I am like you. I never bought into this discussion about that Saudi Arabia was using the reduction of oil prices to penalize Iran, or that type of discussion that we had almost a year ago, or when the oil prices actually, in particular, started to fall below the $60. Right? And the fact that we're not talking, it's not part of the major debate today, actually reflects on this case that the reduction is genuine, is serious, that there are causes behind this reduction of oil, and it wasn't about political use or manipulation of this. Now, my question on this is that Saudi Arabia is traditionally and historically blamed for the impact, right, of oil prices. Go up or go down, always, point out to Saudi Arabia. And it's understandable. Of course, Saudi being the major country oil producer. But it's not only Saudi Arabia. I mean, why aren't we talking about Russia, right? Or now more about Iran is entering the oil market again with the production. Why don't we see Russia is expected or is asked to have an impact also on the oil prices and change, not only Saudi Arabia? And do you think that this might actually present some sort of an opportunity for collaboration, probably between like three countries that they're not getting along very well politically, Russia, Iran, and Saudi Arabia, for more of a collaboration on how to deal with the oil markets and to have an impact on the prices of oil markets?
Well, I think Saudi Arabia has traditionally been blamed or praised, depending which side you come from, yes, for changes in the oil price. And as someone who works in the oil industry, I'm very happy for prices to go up. But of course, that's not the view of everybody. Now, the Saudis obviously have taken an active role in the market at certain times, and a lot of this comes from the 70s and the oil embargo that was imposed on the US and the very high prices that there were at that time. And that's almost kind of ancient history now. I don't think the Saudis or any other OPEC country would ever try anything like that again. And the market has moved on. But the Saudis obviously do take an active role in managing the market, assisted by some of their colleagues within OPEC. And they did this in following the financial crisis. They persuaded various countries in OPEC to cut production, and prices did recover. So, I mean, clearly they have an active role in doing that. And so that's why people look to the Saudis. If you take the US or Russia, they are oil producers of pretty much the same size as Saudi Arabia. But they don't take that active role in market management. I mean, the US has thousands of producers ranging from the Shells and the ExxonMobils down to very, very small mom and pop operators. Russia, not quite as much. I mean, Russia has a number of large companies as well as small ones, but it has state companies, it has private companies. Again, it doesn't have an oil industry that can be easily ordered to turn production on and off. And so those countries have never really coordinated with OPEC. As Dr. Abdulaziz mentioned, Mexico, Norway, Oman, yes, they've cooperated with OPEC at times, and you could imagine that happening again.
Yeah, just a very quick question on this, because I really cannot resist to ask this question, because also you mentioned, why do the people or the world want the prices to go up? I mean, you're in the oil industry and you're for higher prices. actually, does the world really want the prices to go up, right? Why not keeping them down? And
Well,
if
you
you
know, I
can
think-
shed light on this.
Well, for most oil consumers, and you talk about oil-consuming countries, you know, the US is a lot more self-sufficient than it was 10 years ago, but the US is still importing 5 million barrels per day. Europe is a major oil importer, there's Japan, China, India, so there's a lot of major countries that import a lot of oil. Now, in principle, they should all want the price to come down. But you often have, particularly in the US, you have strong domestic interests like oil producers and oil-producing states like Texas, who of course like prices to stay up. I think we're also seeing that the current low oil price, in the long term, it ought to be a good thing for the world economy. In the short term, not so clear, because a lot of oil companies get hit. Oil companies are big investors, and that hit kind of, you take the economic hit on the low oil price some time before the effect filters through to economic growth generally. We're also, of course, seeing major oil producers withdrawing money from their sovereign wealth funds and withdrawing from their savings overseas. So we're seeing outflows of capital. So, you know, there are short-term effects which can be negative for the economy, even if the long-term effect is positive.
Thank you, Robin. Dr. Fadi, you talked about the easiness of implementing VAT, which is convenient. Great. Now, my question is, does that solve the problem? Or should we still expect to see additional measures beyond the VAT? That's one. And the other question is on the same issue. What does that mean just for the ordinary citizen? You know, how is this going, imposing or implementation of the VAT is going to affect the life of an ordinary citizen? Does that mean traveling less, going less to the restaurant this number of times in a month? One car instead of two cars? What does that really mean for the ordinary citizen in the daily life of a citizen, imposing the VAT or any additional measures?
So on the first point, of course, as I mentioned, revenue generation or improving revenue generation should only be one of 4 levels of reform. I mentioned reducing or reforming subsidies, one. I mentioned also reforming government institutions to make them lean, less heavy. Mentioned also the diversification, and at the end, the VAT. Now, there are other revenues in the taxation that could be improved. Dr. Abdulaziz mentioned also the excise that could still be introduced, while customs can no longer be changed and introduced because they're bound at a certain rate. So it's a basket of reforms, and VAT comes handy because of usefulness, because of its ease, because of its predictable revenue stream, and as I mentioned again and again, because it collects so much information on the economy at the very granular level. Now, what does it mean to the citizen? Of course, the citizen, the structure of VAT, he bears most of the brunt of the VAT. That's why, to make it less impactful, countries resort typically to multiple rate, to exclusions, food, other things. But given the fact that it was wisely set, or these discussions to have it around 5% is not going to be hardly felt by the citizen at the end of the day.
Great, thank you, Dr. Fadi. Dr. Abdulaziz, I agree with you. I don't think we are talking about a serious crisis between the government and the citizens of the GCC as a result of this. So I agree with you. It's still lowest energy or oil prices in the Gulf. The government still supporting the citizen in many ways compared to other countries in the world. But let me ask about like the terms of the social contract. Don't you think, or do you think that there is now this opening room for more of demands on reform, political reform, no taxation, no representation or something? Whether that now that there are taxation would be more expectation of representation, for example. So should we expect some sort of reform? That's the first question. And the second question is, do you think the reduction of oil prices, and since you're in charge of the external relations of the GCC, would that have an impact on the external relationships of the GCC, especially in terms of involvement with international crisis or involvement, mainly on foreign aids. Would that be reflected also? Should we expect to see less foreign aid coming from the GCC, or probably less involvement in other conflicts, because of also conflict has a cost, right, for being involved in it? So would that affect the external relationships of the GCC on the political level? Thank you.
Yes, on the first question, I think the call for political reform has been around for a long time, before oil prices went down. And I think it's something that should be judged on its own merits, regardless of government revenue. And we saw in Saudi Arabia the reform of the municipal elections. For the first time, the pool of electors was enlarged. Women were allowed to vote. 2/3 of the seats were instead of 1/2 of the seats were elected. And so I think the march towards reform has been around for a while. And I think it should probably progress regardless of the decline in the oil revenue. I haven't seen the link made between what you said, but who knows? Maybe if people pay more taxes, maybe something will happen. But at 5% of VAT, it's hardly noticeable. Because in 2015, for example, we had several FTA agreements that went into effect with Switzerland, Norway, Iceland, Singapore, a number of other countries, which reduced actually the cost of goods that we imported from these countries by eliminating customs tariffs, including in Qatar, for example. And so the VAT at 5% will bring that up. Did you feel the 5% reduction? Probably you did, because it's so small that you don't notice. And the same thing, I think, if it goes up 5%. Now, if we're talking about 10%, 15%, 20%, as we see in European countries, then it will start to bite. And on top of that, let's say you live in the United States, you pay about 40% of your income if you're in a high income bracket for an income tax. And you add to that sales tax and all kinds of other tax, local, state, and easily 50% of your income, and if you pay for taxes. And in Europe, it's higher than that. Maybe if we reach those levels, I think, and the governments probably will be happy to give people the vote if they are willing to pay those high levels of taxes.
Thank you.
The second question was about,
like on the involvement in the external involvement, whether it's on possible reduction of foreign aid, or not only of foreign aid, but possible involvement in.
I think a lesson from history, the Gulf War of 1991 cost Saudi Arabia alone over $50 billion. And that was during a time when the government was running a deficit. From 1985 until almost 2000, the government was running a deficit. That did not stop them from engaging in a war that they felt was necessary to join to liberate Kuwait. And I think whenever there is a good cause for to defend the country or defend any of the GCC countries, I don't think money will be an issue. And the second thing is foreign aid represents less than 1% of GDP. So it doesn't really, even if you doubled it, it's not going to be a big deal. So I don't expect foreign aid to be affected by the crisis either.
Great. Well, thank you so much for these questions and answers and the discussion on this. And now, sure you waited for long to have your time to ask questions. So, yes, sir. Please introduce yourself and
Hisham
ask
Ayas
your
from
question.
Qatar TV. My question to Dr. Abdulaziz. 2 years back, the idea of introducing any kind of tax was out of question, was like a taboo. Don't even mention it. Is the era of GCC as a tax haven gone forever, number one? And is it a prelude to another form of taxes in the future, maybe knowing that more than 80% of people living in the GCC are expats? So it won't affect the GCC nationals as much as it will affect the non-nationals.
I think it's.
Thank you.
Sarah, you want to answer it or wait for a couple of minutes?
Let's see. Okay, well, if I might add just to the question, maybe we'll probably cover that. Because large, part of the people living here, expats. If you can also touch base on how is this going to affect the expats also living in the GCC would be good.
Well, I think the VAT will be implemented. Everybody will have to pay it, regardless of their nationality. And so it's going to be the same, I think, effect on everybody. Now, I think it's a myth, though, to think that the GCC countries are tax-free. Yeah, we have lower rates than most other countries, but there are a lot of taxes. And as I said earlier, one of the objectives of the VAT is to try to eliminate some of those nuisance taxes that you pay without noticing sometimes. And we have hundreds of them. And so if you, the VAT, you can look at it, as I said, as a reform measure to improve the tax system. It will add additional revenue probably to the government, but that's not the main objective. And as I said, 5% at this level is not going to affect prices that much. In terms of distribution, whether it's going to affect lower income consumers, yes, it might, because there's a flat rate. And that's why we are introducing with the VAT an excise tax system. The excise tax system will be imposed. Still, the list is not agreed completely, but it will target two types of goods. One are what they call sin goods, like alcohol and soft drinks and things like that. And the other kind are luxury goods. If you have 2 yachts maybe, or a couple of private airplanes. So the luxury goods will probably be targeted by excise taxes, and the bad things, that you also will be taxed. Yeah, sorry. Yeah, cigarettes. Yes. Cigarettes have been taxed for a while, but we may double the tax on them. And so the excise tax, especially on luxury goods, will improve the distributional effect, meaning that they will target higher income people, and it will reduce the regressive, nature of the VAT.
Great. Yes, sir. Go ahead.
My name is Luis Pinto. I'm a visiting scholar from the School of International Public Affairs, Columbia University. So my question is, this is a key year for oil pricings, especially because some uncertainties will probably this year become more clear, and that might affect the volatility of the oil prices by year end or the beginning of the next year. Especially we're going to know how much oil Iran will actually be able to deliver this year. That's one of the main uncertainties. And we are going to have a better picture of the cost structure of the non-conventional producers in the US, and also their actual financial soundness. So most likely, the most recent forecasts are saying that production in the United States will fall maybe by 600,000 barrels a day this year. In case that happens, how do you see the role of OPEC and Saudi to accelerate probably a rebound in oil prices by year end or the beginning of next year? And will they do that with an agreement with non-OPEC countries like Russia, which is very unlikely since, well, by now probably OPEC countries know that Russia don't necessarily commit with the agreements they make when they say they will cut production or not. So will OPEC be willing, in a scenario in which oil production falls, will OPEC be willing to get their position as a swing producer again or not? How do you see that happening?
Thank you very much. Yes, ma'am. Question? Can we get the microphone, please? Sorry. Here.
There is one microphone.
Yeah. Yeah. Not sure if it's working, but here is one.
No, it's not.
No, it's not.
Yeah, over here.
Thank you. Hatoun Al-Fasi from International Affairs Department, Qatar University. My question is to Robin regarding the question is regarding the environmental impacts that shale wells affect environment and whether they are, if you compare them to traditional shale wells, what is exactly, where are we standing, and whether this is affecting public involvement in calling for using or not using such types of oil. And then I had this question, the same question of yours regarding the impact of oil prices on social and political reforms. I was remembering or revisiting the 90s when the aftermath of the Gulf War affected, especially not only Saudi Arabia, but the whole Gulf, and it pressured the states to go into reform, and we saw all the Shura councils created during that period. So, okay, I take your answer that it is not effective, or that it's not, that the effect of the prices are not that serious yet. But don't you think that the Gulf countries will go some way into accepting some of the political participation and demands on more public participation?
Thank you for the question. Let's take the last question. Absolutely the last question, yes.
Hello, thank you very much. I'm Yusuf Ismail from the British Embassy. So, Abdulaziz, Your Excellency, you mentioned that VAT will be introduced from 2018. Could you just say what steps will be taken ahead of 2018 to help lead into the reform? Thank you.
Thank you very much. Here's what we're going to do. I would like for our great speakers to respond to the questions and take one additional minute after you respond to the question, closing remarks on your part. If you would like to say anything on this discussion, we'll begin with Robin.
Yeah, so to the first question. So current global oversupply of oil is perhaps in the order of 1.5 million barrels per day. That oil is going into storage. There's now, at the end of last year, there was some 3 billion barrels of oil in storage around the world. It will be more than that now. So the market has to get back in balance before that excess inventory starts getting drawn down, and then you can expect or hope for prices to increase. As you said, US oil production forecast to decrease by 600,000 barrels per day this year. Iranian production, in my view, I'm probably a little bit more optimistic on that than some others, but in my view that may increase by 600 to 800,000 barrels per day. So you kind of add up all these moving parts and consider that demand, of course, is also growing by 1.2 million barrels per day. You could, by the end of the year, see a market that is kind of close to getting back to balance. And it may be a bit earlier than the end of the year, maybe a bit later, but something like that if these numbers are correct. Now, at that point, you could hope that, yes, prices would you may see some improvement in prices. I mean, that is a forecast. Of course, US oil production may be more robust than this. Iran may add more or may add less. Chinese economy may slow down. Demand, so I mean, there's many moving parts. But that's I think is a kind of a reasonable outline of a scenario. Would OPEC then take action at the end of the year? Well, I think OPEC will take a look at the market and see where things are. As I said, I think it's very difficult to take action now because, particularly with Iran, you don't know what Iran's sustainable level of production will be, and we'll only probably know by the end of the year. And if, for example, Saudi Arabia were to get together with Iran today and say, well, let's come to an agreement on production, Iran will say, well, we can add 1 million barrels per day, and the Saudis will say, well, no, we think you can only add 500,000. And who's to say who's correct until we actually see what really happens. So it's very hard to reach agreement until you have some real facts. I think that OPEC would be cautious because let's say prices have increased substantially and US oil production has fallen. OPEC would then think, well, the strategy has worked. That's fine. We've done what we set out to do. We've dented the high-cost production and we've recovered market share. If prices are still low at that point, then OPEC would be in a difficult position to be thinking, if we cut, we're just going to make it easy for these shale oil guys. They obviously in that case, they've proved to be very resilient. Well, we've just thrown them a lifeline. And in that case, anybody who's running a shale oil company or financing it will think, well, this is great because whenever the oil price goes down, OPEC will step in and save me. So I can't lose. So I think whatever the situation is, it's difficult. And for the reasons I said, I think it's also difficult for Iran, Russia, and Saudi Arabia to reach an agreement on this. I mean, they will talk, and of course the talking is useful for reaching a common understanding, but that's not to say it'll lead to any kind of common action. On the environmental question, there has certainly been a lot of concern and attention to the environmental impacts of shale oil and shale gas production in the US. You've seen some parts of the world, I think, where that environmental concern has almost entirely stopped shale gas development. For example, in the UK, there's been one shale gas well has been drilled and tested, and there was such a degree of public opposition and that was, I think, 4 years ago now, such a degree of public opposition that no company has been able to go ahead with any further drilling since then. It may happen eventually, but it's certainly been greatly delayed. France has brought in a moratorium on shale gas production. It's been very difficult in Germany and so on. But other countries, and I mentioned Argentina, Russia and so on, are going ahead quite happily. I don't think there will be opposition there. And to be honest, I think the US has largely got used to it. I think the areas where it's happening, Texas, Montana, North Dakota, most of the kind of oil states, oil industry is a huge employer and a huge taxpayer, and they're really not going to kill the golden goose by enforcing a lot of strict environmental standards. I think shale oil production can be done safely. I don't think it's significantly more environmentally damaging than conventional production if it's done right. And we've learned a lot over the past 5-6 years about how to do shale gas production in a responsible way. The one final point I want to make is also we've looked quite a bit at the short term in the oil market and the GCC economies. I think we also need to think about the long term. I think we're talking about how do we cover our budget this year, next year, but we also need to think over a 20-year, 30-year horizon. There'll be increasing pressure on oil use. There'll be tightening climate policy. There will be other innovations. Electric vehicles, for example, will become more available, cheaper, more effective. So there's a real need, and this has been said many times, it's not new, but there's a real need to diversify the economy. Raising revenues is great, but you need a sustainable economy to provide those revenues, and one that is, where the oil industry, yes, is an important part of the economy, but is not the sole support. And now that for me is the real 20, 30-year policy challenge, is to develop those alternative industries and other sources of growth.
Thank you, Robin. Dr. Fadi.
Just my final thoughts on this is that 2 years is not a lot of time. Yes, the GCC has been getting ready for so many years, but now they've kind of committed to doing it in 2 years, and that there's a lot that needs to be done and sequenced rightly to hit the milestone right. Otherwise, we've seen from many experiences in introducing VAT, it could be derailed, it could go wrong. So I would stress 3 things: human capabilities, developing human capabilities. We're not talking about study tours, we're not talking about workshops, we're talking about shadowing, literally planting those VAT administrators to be in various tax authorities all over the world, preferably in similar regional setting, to be able to be trained and get ready for that. Institutional development, as I said, there are several options that need to be responded to. Is it going to be part of a Ministry of Finance? Most probably yet. Is it going to be an authority? How much independence? What do we do with the revenue? Do we set up a separate fund for that to be used under control of pay attention to WTO implications, using them for private sector and so on? But there is room for using that fund in so many different ways. And last, what do we do with the consumers? A lot of awareness raising needs to happen from now until we hit the milestone of January. So the communication strategy needs to be in place to educate the citizens, businesses, various consumers, associations, as well as government entities on the implementation.
Thank you, Dr. Fadi. Dr. Abdulaziz.
Thank you. I think on oil prices, I think we talked about the supply side, and I think there is a consensus that in the short term, probably on the supply factors will probably push for lower prices or maintaining prices, unless there is major conflict or disruption of supplies. But on the demand side, I think a lot of the low prices are driven by sluggish demand around the world. So if that changes next year in China or other places, I think that could lead to a rebound in the prices. So both, I think, we didn't talk about demand enough, I think. On the link between reform and economic crisis, I think this is an important issue. And I see this, the issue of low oil prices, the drastic reduction of the importance of oil as a source of government revenue is causing, is focusing the minds of policymakers, fiscal policymakers. Not so much I think on the political side, but on fixing the economy. And we see now, I think, more, the prices of, I think, of fuel will probably be brought even more to the international price level. Support for imported goods, basic goods, which is now the norm, has been reduced only in, I think, in Bahrain, maybe a couple of other countries, but has not really been tackled yet. But that, I think, is another source of reform that we need to address. Water, electricity, all of these things, I think, all the package of economic reform that we have been putting off for a long time, I think now is the time to think about it, to introduce serious reforms there. I think politically, I really don't know whether the issue of taxation outweighs other factors. The fact that we're living in a neighborhood of huge, I think, political conflict and polarization, I think, throughout the region. And if you open up the system, who knows if that polarization will also be imported. And so I think these gradual steps, if they work out, let's say if the municipal elections in Saudi Arabia bring about positive results and do not cause political polarization or social polarization, as threatened to do during the election campaign. And I think if we were able to manage these steps in a prudent way, I think government will be more relaxed to introduce even more steps. However, if the opposite happens, because elections could cause either way, and we saw in Egypt and other places, it could act as a polarizing factor. And I think that would probably postpone any further steps. And on the question from my Turkish friend, I think I mentioned that we started working on the VAT system in 2005. And so since 2005, the work has been both at the legal level, meaning putting together a blueprint, a treaty that should be finalized in 2016. But the more important part, which takes time, is building capacity. And I think most countries now are ready to introduce the VAT probably tomorrow in terms of capacity, but not all of them. And so we've been waiting that all the 6 countries are ready to introduce the tax, building capacity, training people, hiring people, and all of that. And because the VAT system or any tax system is very complicated, very difficult, and you need to, we learned from the European experience that fraud is almost possible, every level of collection. And so we have to work on that. You have to coordinate with all the stakeholders, and that takes time. But I think by 2018, almost all, if not all, GCC countries will be ready for implementing the tax.
Thank you, Dr. Abdulaziz. And on my part, I'm not an oil expert, so I cannot tell you whether the prices will go higher or will stay at this level at this point. But I come from a different background. I come from a conflict resolution background. And on this, I always have a view on how we can deal with a crisis. Any crisis could be a threat and it could be an opportunity. I genuinely believe that there is an opportunity, or reduction of oil prices could be an opportunity for many good things to come out of it. And I can mention many benefits that could come out of this, including but not limited to more efficiency, in government performance, in less bureaucracy, sustainable development, developing of alternative revenues to energy, and reform. Accountability is another thing that we can talk about, or this crisis can, or the reduction of oil prices can remind us, of accountability. And here, I don't mean by accountability only the accountability of governments, but also the accountability of the citizen, on our spending, how we behave, how we spend, right, in our, consumption, on our, this should be a reminder for us as citizens also that, we have to look at other alternatives, that we have to be accountable to ourselves first and foremost. And with that in mind, the good news that I have also for you is that our next event on the 17th of this month, we're having another discussion on Yemen. Yemen is part of this political discussion that we're having, and today we touched on issues like external politics and how this is going to affect or going to deal with it. So on the 17th, we're going to have another discussion on Yemen and how this is going to, not related to the oil prices, but in general on the situation in Yemen, with great speakers from Yemen and from other countries as well. With that, I end, and I thank you so much for your patience and for your interest in this discussion, and we'll see you on the 17th, inshallah. Thank you.